you play like the Kingdom Hearts version or some of the more juvenile geared versions. I
Yeah.
excel at those.
So we just went live, and so Rich Monroe here with BNB Live. Thanks everybody for jumping on this week. We've got a friend of mine with Duke Allen and Company, and we're going to be kind of digging into the deep world of hard money lending and business credit today. So before we get started, just a quick intro. BNB Investing Group is a group for members that are kind of navigating the real estate investing world for short-term rentals. And we kind of explore the differences between master leasing, management, and then actually purchasing properties, whether it's distressed or straight retail to do short-term rentals with. And so part of that analysis, we usually like to look at kind of the different financing options that are available to us as investors. And so with that, I've kind of invited Cait to spend a little bit of time with us today. And Cait, tell us a little bit about yourself, and we'll just jump right in.
Thank you so much, Rich. And I appreciate you kind of setting the tone with your introduction. And that's exactly why I'm here today. Rich Monroe is a very active investor. I'm a member of our Real Estate Investors Association that meets monthly. And he's been a keynote speaker a couple of times at our North Point RIA as well. So Rich is very well versed in this space. However, he understands there's a limb that's needed for every aspect of getting a deal closed. And of course, financing is one of those major limbs. And so I'm excitedly here today as the senior account executive of Duke Allen and Company, the #1 hard money lending firm based in Georgia, lending nationwide. And I believe that Rich has specifically handpicked Duke Allen and Co. to come speak about financing options because we are the house that houses every financing option, every creative solution that you can think of, and likely some that you haven't that will kind of scratch the surface of today. So I'm so excited to pack a wealth of knowledge into a very straightforward talk today. That's what's so great about it. When it comes to the private sector of lending, we're focused on the strength of a deal. It's entirely asset-based and return-based like you all are in your pace of building our portfolio. And so the presentation reads that way too, very straightforward. And that's how we like to keep the process as boring as possible.
Awesome. So everybody jumping on right now, just shoot us a quick yes in the comments if you can hear us okay. You guys can throw some questions out there as well. I'd like to really just take a step back for a moment. A lot of our members are kind of fairly new to real estate. And so let's just kind of understand the basics. What is a hard money lender, and how does that compare to like a traditional bank?
Absolutely. So a hard money lender will be important to kind of set the tone for you guys what it is so that I can describe to you why it's important that we are the #1 reliable hard money lender. Because when it comes to not relying on banks and the way that they scrutinize deals a lot more closely, the way that they take a longer time, the way that they, of course, have a full recourse product for you, meaning that it's for our new guys showing up on your personal finances immediately. And also the way that they're not as, savvy when it comes to looking at a conventional opportunity and letting it go through. And so we're not focused on conventional loan parameters, although we do offer conventional products as well for primary residence, investment properties, what have you. So today we're going to focus on the private space. That being said, as a hard money lender, we're asset based. So hard money is a hard asset. And so when I say that, that's something like authentic silver on the wrist. That's something like, we'll keep it focused on what we're talking about today, real property, something we can grab. That would be extended to, real raw land that can be developed, graded, surveyed, separated out into a lot, parcels, what have you, something that there's some potential to, and that will hold its value throughout time. So we consider ourselves most involved in this active space in terms of leveraging our investments in order to fund your projects, whether they be, fix and flips, buy and hold rentals on the short or long term. We're focused on how it will either cash flow or how it will make a return on investment for you at the end of the loan. And as long as we can prove that, we will fund it. So as a hard money lender, that's all it takes is a hard asset and a borrower who has a good strategy. And from there, really, getting the deal in front of us, it's our responsibility to make sure that it makes sense, because not only are you guys our client, but so are our capital providers So we actually at Duke Allen Co. as a hard money lender have a super unique structure in which our family office, a lot of people in this space will call hedge funds, is really a group of individuals and groups of men and women who don't know each other, but they all have a similar interest in funding the deals that we bring them. And we only bring them good deals. So as much as we want to get your deals funded, we want to make sure that, our capital partners have a good client and a good project that they're becoming involved in. That being said, as the number one hard money lender, we stay reliable by being super upfront in the preliminary process. Does this deal make sense or not? Putting terms in front of you that will be retained from the moment you see them until the closing table. None of these rug pulls and sort of shady avenues. And we're huge proponents of education, just like Rich himself and what he's doing here with this BNB group in Amstra, and which we like to, make sure our flyers are up to date as the market shifts and conditions shift. We're looking at underwriting, and instead of telling you no, we're going to tell you no because, and we're going to do what we can to guide you towards the right project in the right area and get you the highest leverage possible at the lowest rate that we can secure.
All right. So I know you have a brief presentation you wanted to cover as an overview for everybody. And so we'll jump into that in just a second. But just by way of example, so let's say I've got a purchase of a property that's, a 4-bedroom house in Atlanta, and it's a $250,000 purchase price. I can go to my local bank and use my personal credit and, have to put 20% down, probably get a pretty good interest rate on a longer term loan. What does that look like with you guys in terms of what's required as a down payment, for example, and kind of what the potential interest rates look like?
Definitely. And we'll definitely take a look at the lending matrix later. But I like to say it's never a hard no. Again, it's where will we go from this if it doesn't work out? That being said, when you are, again, thinking of the local bank, you have to remember that you'll be the primary guarantor, that you will undergo a much more harsh underwriting process that will take a bit longer, and that you don't necessarily automatically have exit financing in place in the case that you're, as you mentioned, going into a distressed project and planning to fix it up before holding long term. So let's say right now, given that I have access to traditional space of lending, I can see what the blend reflects today. Let's say we're sitting between 3.875 and 4.125 right now in rates. Right now, we're staying fairly consistent in this space, starting out at about 6.875 to about the 9.99 range for our bridge products, a long-term product. We're also looking at a 10 business day close. That being said, with title open, these deals, if title were open when they came to us, we would have been able to close within 72 hours. So that's the flexibility of it. That being said, we can also, in the private space, keeping things under your entity, offer a product kind of like the bank does, where we just want a little bit more information from the borrower. So we would be looking at taxes in the same way, but we'd be able to secure you a loan parameter of 100% loan to cost at a rate typically below 12%, with the most common being between 11.4 and 11.8. That being said, again, unlike the bank, we're keeping everything beneath your LLC. We're working at a very quick pace. We're not even looking at credit in some cases. It's completely asset based. So in many cases, we'll want to do that background check just to make sure that anything that may pop up, a BK, bankruptcy for our new guys, foreclosure, can be explained, and we understand what's going on. But they're even at 8%, money's the cheapest thing you can buy, and we're focused on getting you what you want, and we understand your appetite as an investor. We're not looking at you like a risk. And a lot of these guys, I like that you talked about going to a local bank, Rich, because people will keep up with the offerings and the matrix of banks like Chase, banks like Truist, the big guys, and those guys aren't for you. They're looking to offer aggressive terms and client servicing style to the big guys out there, who are franchise owners, who are opening 700 McDonald's internationally over the next year, that kind of guy. But you won't get that one-on-one intimate, okay, we want to offer you what we would offer anybody, close this quickly, get you started on your journey. explain away, any markups on credit, that character component for our new investors. This guy's got a good head on his shoulders. All those little things matter. And it's almost it's a sterile relationship with the bank versus a more human person to person looking at you and looking at your project and your future and what is withheld in your strategy and how this project will be leveraged towards the next. All of that is being considered. So I think that's something that, it's what a have versus a have not really. It's completely black and white, the banks versus us.
Okay. All right. Very cool. So let's jump into your little presentation here. Let me see if I can share my screen. All right. Hopefully everybody can see that.
And we're live. So I definitely, again, everything is straightforward. So I'm going to keep things very straightforward, but I hope you guys are able to kind of see the order of things as we're going. And please feel free to reach out, ask any questions. We'll provide where you can find us past this presentation. But today you'll learn a bit about who we are, what we do, how we do it, and when we can do it for you, of course. So we're a real estate investment lending firm. And like we were just talking about, Rich and I, we're an outside of the box lending firm. So we're not caught up on deal complexity, timing, nicks on a borrower's report or otherwise, so much as the bank. And so we are completely focused on real estate investment. That being said, given that we are completely focused on real estate investment, I thought it was a great piece that Rich kind of had me break down what is a hard money lender. So we've kind of already covered that. So a hard asset is that collateral. In our case, we focus on real property, which would be the vertical, the land, whatever it have you be. And we'll kind of talk about the way that we look at leverage on a simple bridge that would include land acquisition only versus a property that you'd like to rehab or build where you've got that vertical collateral as well. And so the reason why people use us over the banks and oftentimes in tandem with the banks is because of their access to lending and because of their access to a creative finance setup. And so we're focused on how to get it done, not how to disqualify you. That being said, the way that we get that done is by conducting our own underwriting preliminary, as well as doing our own due diligence, getting to know who you are, just to kind of keep things in the tone of just how casual it is working at Duke Allen and Company. Imagine you were to ask me, hey, Cait Alford, Hard Money Cait, will you go to your buddy and ask him to wire me $150,000 on Tuesday of next week, and I'm going to buy a house with it. And I say, okay, let me make this make sense on paper. That's exactly what we're doing over here. And so you can understand the strength of the relationship is our main value, and the relationship that you build with us and what we'd like to ultimately make long term is of value as well. And that's why we're not trying to make any and every deal go through, but again, a deal that makes sense on paper, makes sense in numbers. We have no issue leveraging our relationships, putting together the proposal to the appetite in the eye that we know of our capital provider in order to get you what you need, not on this deal, but several deals moving forward. That being said, we're a hybrid hard money lending firm. So with our vision, we are approaching this from a standpoint of forming long-term partnerships. And so we'd like to approach what we had in our earlier days of a private fund in which the investors, as well as our end clients, have a more close relationship, in which our platform is set up where you come to our fund again, and you have somebody making a live bid on your projects, and you have that sort of transparency to the process. And so that's our bread and butter with bridge products. And so we've leveraged our capital providers thus far, but we excitedly look forward to kind of loosening up on parameters even more. And that's why I say it's never a no, just come home and we'll teach you how to get to a yes. So that being said, our clientele, no matter where they fall, they are all real estate investors. They all have a different reason behind their strategy, whether it be commercial developers who are opening several mixed use properties. For our new guys, mixed use would be what we consider in terms of looking at it would be a 60% residential, 40%, let's say, restaurant, something commercial on the bottom. If you think of apartments up top, restaurant on the bottom type scenario, whatever it is, they all fall into real estate investors, but we primarily serve real estate investors who live their life, and their main source of income is through their portfolio, whether it be from cash flow that they've been able to establish, like you all are aware of, with a short-term rental that's bringing in more than the market rent and maybe on some months less, but has that break even and far past it in the green. Whether it's in terms of something called 70% rule, we use at the very preliminary stages, looking at the total project cost. We call that the TPC, when you're taking your purchase price of your property, taking the value add that you have to your property, whether that be rehab, renovations, remodeling, adding those numbers together, dividing by 70%. That is the number we're looking for. And that is how we can get optimum leverage. So let's say a project falls below 70% rule. Again, this is creative thinking. It's not a denial. It's okay, how can we look at leverage and possibly the rate to make this happen for you, even though this deal isn't on the money 70% rule, because there's still money to be had. That being said, we have that schema, and I've been able to learn a great deal from the managing director and the start of our initial fund at Duke Allen and Company, Joseph Castaneda. So he has himself an extensive background in finance, from being a closing coordinator to working at a bank, to working for a hard money lender himself. He's also a real estate investor himself. So it's nice to know that, the way that we're looking at deals, the way that we're assessing markets and macroeconomic conditions, come from that well-educated, developed background, as well as from our own activity in this space nationwide. So several of the account executives on our team are investors ourselves. And from the time we built that initial fund, we began to continue to scale and form the vital relationships that allow us to continue doing what we're doing now. And I definitely encourage you all to stay up to date with the overall temperature of the market, but to not be fear-mongered by it. So it's always nice because, again, we're looking at those conditions, but to have an idea of our blend, to stay up with us, to see what we're offering you based on, the week itself, based on the location, to have that sort of broker price opinion, a desktop valuation from us using public data, as well as our inner knowledge and past knowledge. That being said, we've been able to scale today to where we have over now 22 account executives, most of which are loan officers like myself. And most of us are with Empower, with First Option Mortgage. So we have access to some incredible products, and we're a lot different over at First Option Mortgage as well. And Joe is the leader of that team. And so he's been able to inject his creative mind into what we're doing in that space as well. And so we're looking at all scenarios. We're offering, credit repair component, like your deal. We're going to search for the very best option for you, hands down. So you're going to have a look at what it'll look like in terms of what you could get from a more institutionalized lender, as well as in terms of, deal complexity and time restrictions, what we can offer you in the private space very quickly. And what's great about that, we can go ahead and line up, exit financing for you if it is a time constraint. So you've got, of course, CEO, Managing Director, Joe Castaneda. Many of the people out here know him as Hard Money Joe. He is our world traveler. He has gotten our feet down in Orlando at our second office out there, and we're working on Houston and North Carolina now. And so you'll see him, and when you do, it's likely a photo from a plane. What's awesome about him is when I say living testimony, we use our own products as executives. He's that guy. When it comes to our lines of credit, when you see him in the lounge eating his nice butter and bread and his little mimosa, that is from the line of credit. And so he is living testimony to the perks that come with being an investor. A lot of us, Rich and I were kind of having some chatter back and forth earlier before this about how, you never really clock out. And it's really an addictive space to be in. It's kind of quite funny how a lot of us are attracted to this space of real estate investment to kind of take back our lives and set our own schedules and make money in our sleep, all these beautiful things that come with this space. And then, when you're really hungry and you've gotten the cadence down, you found your strategy, like Rich with his short-term products and his property management setup, he's able to continue to proliferate while minimizing effort. You still put out an immense amount of effort because you just love what you do. And there's money to be made. That being said, Maria Castaneda is our chief managing partner. Again, lots of people here, just so that you know, are looking at the file and making sure that it's perfect before we go and we ask in the scenario from earlier for that $150,000. So what you give us are the bones that we can do to build a body out of the deal, make it make sense. And then, the conversation we have back and forth, even adding, he's a real nice guy and very responsive. Everything helps. We consider it all. It's very relationship based in this space. And of course, we have longtime executives, honorable mention to Leland Edmond. He's big out there. If you need a property, he probably has it. He's got an extensive buyers list. So, securing one of his deals would be hard. But, we've got a lot of strong players like himself. We all have different backgrounds that incredible amount of value to bring to the table. And at our Georgia office, we also have a builder and his team who rents one of our office doors. And so you've got a builder right there on site as well. Sit down, go over plans, get your AE, your architectural engineer for the new guys when you're working on new construction, something that, you feel like you just really got to have your hand held sometimes. And we're no stranger to that. That being said, this is just one of our perfect mottos. If everyone is moving forward together, then success takes care of itself. And that includes moving forward with you guys as our clients. So I also want to just kind of next here go over, with that being said, what we offer in terms of a line by line. So I told you our bread and butter, our bridge products, but I'm going to break down what those are and also let you know about what has now become to the bread and butter. I'd say the toast are our long-term products as well as our same-day products. So we have the buy and hold rental, which you all are often reinforced the value of when it comes to real estate investment. There's a kind of old adage where wholesaling, quickly letting go of properties, that's little return, but it's quick money. When it comes to the fix and flip, where you're purchasing, having some value add, and then selling off at, say, the end of a 12, 18-month term, that's considered a little bit slower, but still very quick, but medium money. The buy and hold is the slow money, but the big money, and leaves opportunity to continue accessing equity, especially as we notice the trend to be upward with property values as we do now. That being said, I'm going to kind of go a little bit more long form into which each program looks like, but just at a glance, we have the buy and hold as our long-term product, cash out refinancing, fix and flip short-term, new construction, as well as transactional funding. So this is actually something we use internally to just very quickly look at week by week, a sheet like this one, and the numbers will change of what the leverage is looking like. So this is fairly accurate to reflect the blend over the past, ideally 30 days, but this would account for the past 60 days. So for our bridge products, that would be our fix and flip, new construction, as well as short-term refinancing we can do as well. That's ideal for our guys who are in a mid-construction phase, or if they want to very quickly pull cash out before they sell, whatever the case may be, we can make it happen on a short term as well. We have products that go down to as low as 30 days, which I always encourage people to take advantage of, but that's a product that's suited for a genuine 30 days, but the rate starts at 4%, unlike pictured here. That being said, we go up to 100% loan to cost, but that limiter would be 75% loan to value. So in terms of what it'll cost to do the value add as well as acquire the property, we'll cover 100% of that. And so our limiter in terms of the loan parameter is 75% of the value of the property is where we cap that off. So the blend reflects right now for our bridge products rates between 7.75, with the highest being 13%, and to let you guys know the average reflecting in the nines. And just to kind of give you a little bit of insight as we look at these numbers too, when you look at the lowest rate and the highest leverage, you can imagine, ideally that's a borrower who has a little bit of experience and a pretty good FICO situation. And we've made adjustments for the fact that they are, near the property, things of that matter. And so when we're looking at things like 13 and, if we're saying we're coming down to 50% LTV, which can be a possibility, that's for our credit distressed, no experience, remote borrower. There's an adjustment made for everything, whether it be positively or negatively. And that's why we say it's not necessarily a no if it doesn't fit the box, but it reflects the range at which you'll fall on. So if you know that you're, I hate to use this terminology, but a sort of a subprime investor with no experience, then that, we're going to take a chance on you, but given it's a higher risk, there are adjustments made for that risk. And what's great about it, being that it's relationship based, you do have the opportunity to plead your case for those adjustments once they are made. Points are 2 to 4. No monthly payment options are available, which is incredible. So to let you guys know kind of very quickly how you would qualify for our offering, in which all closing fees are rolled into the loan, just insurance and some title fees are paid at closing, but all other fees associated with the loan are rolled into the loan, as well as you're foregoing all monthly payments and only making the payment on your bridge product, whether it be a fix and flip or a new construction, let's say at the end of that 12 months, that's when you're doing a payoff. Or of course, you leaned on us to have exit financing in place, and we're having, let's say, partner 3 refi you out of the bridge that you have with partner 1. And so what you would need to be very straightforward with that is to not be having a project in Maryland and to have a credit score of 640. So very straightforward. So pretty much across the board, we can offer that, where you have no monthly payments. And in some cases, I'll say closing fees are rolled in. So that would be best suited to the mid-construction refi. We're able to have you bring absolutely nothing to the closing table with that and roll all fees in with that, because of the fact we're able to assume equity that you have with the property that you currently have interest in, that we're doing that mid-construction refi out of. So closing fees and no monthly payments across the board, no down payment with this option if you have some equity that we can assume to cover what we'd want you to bring to the table. So that's why it's a fairly wide range, and we kind of talked about how that range is affected of what you'll bring to the table. Again, based on risk assessment, you end up having to have some skin in the game, and if there's no equity, in the case that you're already in the property and getting that mid-construction refi for your bridge, but you're coming into the project, then of course we can't assume that. So that's going to be in between 0% in the case you're able to secure 100% loan to cost of a down payment, up to 30% in the case that, let's say, we're only able to pull terms to get you 70% loan to purchase. So that's important to know too. So our typical parameters, we're going up to 90% on the purchase price and 100% of any value add, your rehab, renovation, remodel, whatever have you. However, when you look at it as a 0 to 30%, I want to let you know that's of the down payment, not of the TPC, total project cost. So we're also super lenient on credit in the markets that we have the bandwidth to closely manage along with our partners. So that would be Georgia, Florida, North Carolina, South Carolina, Alabama, and Tennessee. We closed a flip at a 490, but the client was liquid heavy and had a fair amount of experience, showed that, in the past 36 months, this is something that he's been building momentum in. And so we were able to make it happen. That being said, outside of those states, we want to see at least a 600. So I always say the closer to, the mid sixes, the better, but we can take a closer look at you being in the sixes and up nationwide. But in Georgia, Florida, North Carolina, South Carolina, Alabama, Tennessee, we have the bandwidth to closely manage, even meet with clients, what have you, and have a close look at projects. And so we're comfortable dealing with all types of background situations. And, we do have the offering of something called a letter of explanation, and we'll actually, look at what you have to say for anything that may show up on the report or in your past that you can explain. And, we're reasonable people, and we understand that a lot of times the deal is what's going to get you out of a hardship that you've been through. So, the great thing we were talking about, there's money to be had. We're in the green building a portfolio, but we understand you have to start somewhere, and not everybody's there yet. That being said, I wouldn't recommend anyone to spend their last in the hopes of making a deal work, but if the deal makes sense, we want you to get that win. That being said, transactional funding is even more straightforward. There's absolutely no docs except for the A to B contract, which for our new guys, that would be the initial seller and the wholesaler. In the case you're a wholesaler, the smaller portion of our market that we serve, and the B2C contract between that wholesaler and yourself as the end buyer. And so we just need those two contracts and closing attorney information. We'll schedule those closings to happen on the same day. We're on average collecting just 1% on this one-day transaction. No closing fees out the gate, covering the full purchase. Let's say, hey, can you wire me $100K at 8 a.m.? Yeah, sure. Are you going to have $100K plus 1%? at 4 p.m. Okay, cool, let's go. Need the contracts. This is super quick and super straightforward. And due to the low risk, we can secure that low rate on average of 1%. And to be competitive, we stay near 1%, 1.125 at most. Long-term products, super flexible. It goes across here too. So even on our 30-year options, 30-year fixed options, we have the opportunity for a 3-year trickle down. And so that's a 3-year step down prepayment penalty. So that would mean, of course, if you were to have a buy and hold property that you were able to see the value in, get it cash flowing, and then you get an offer you can't refuse. You're 3 years in. If you were to go ahead and try to pay out of that long-term product in year one, that would be a 3% prepayment penalty. In year two, that would be a 2% prepayment penalty. At the 3rd year, it would just be a 1% prepayment penalty. And after that, you're good to go. Just 3 years, let that trickle down. And you know, let's say year 3 again, that offer you can't refuse comes around. You're just eating that 1 point on the back end. And so we keep things fairly conservative. That being said, we go up to 85% loan to value, extremely competitive in terms of, and there's a tiny bit of feedback I have here, so I apologize, but 85% loan to value is a super, super competitive leverage. So with that, we're looking not at loan to cost, but loan to value. And so, you know, say you've got this property worth 100K this year, or I'm sorry, that was worth 100K when you bought it. And then 3 years later, you go to refinance, it's now worth 200K. We're bringing 85% based on the value of the property, not what you purchased it for the year prior, which is, again, that 85% super, super competitive. And I will let you know as well, of course, that reflects our more, you know, suited borrower who, you know, has a better credit scenario. You know, we can see what they have planned for refinancing into their rental portfolio, what have you. And I do think that this is a great opportunity to mention to you all, given your background of having an appetite towards a short-term rental product, that in terms of underwriting and underwriting risk, I'm always willing to take a look at, and more than, of course, any sort of pro forma rent roll you have together, ADRs, average daily rate for our new guys of what you're seeing yourself able to bring in. However, I'll let you know that once we go into due diligence, they're looking closely at just straight up market rent. And so we can do all that we can to, you know, support the fact that there's these incredible opportunities with travel nurses and corporate housing. And like you have the opportunity, the potential, and, you know, quite frankly, the market to make an incredible amount of money. But in terms of underwriting and accounting for risk, we're looking at cash flow based on market rent. A lot of the times those are the numbers that kind of keep us on solid ground. And so it's good to have an idea of that, no matter, you know, what things may look like. What you know is that in terms of the numbers, that market rent is the strongest figure in terms of calculating the debt to service coverage ratio. So rates starting off in the high 6s and going up to 10, which is not very common at all, but, you know, we like to be very transparent and just let you know just how high it can get. That being said, we have 5 through 10 1-ARMs. And for those who may be fairly new, the number on top, when you see 5-1, 7-1, 10-1, represents the time throughout the life of the loan on a 30-year option that the rate is fixed. And after that 5, 7, or 10-year period, it's subject to fluctuate month through month due to, you know, the good meltdown decades back there. There's thankfully no way at all. And of course that we wouldn't to do anything predatory like some crazy balloon with us, or, you know, a 10% rate hike, you know, on a bad month for the market, that caps at 3.95. And you'll actually be given, with your detailed LOI, letter of intent, a look at an average of basically a projected fluctuation in the rate past that 10, 7, or I'm sorry, 5, 7, or 10 years. That being said, we've got interest only ARMs as well. And of course, a 30-year fixed option, which a lot of times people are comfortable with that, just knowing that, you know, it could be the difference of starting the loan for your buy and hold rental at 8.25% versus 8.5%. At that 8.25%, after it could fluctuate as high as, let's say, 1 month it's at 12%. But with that 30-year fix, you know, at least, you know, you'll have that 8.5% through the life of the loan. But of course, that 3-year trickle down PPP is there, prepayment penalty. So credit lines, super love talking about this because the possibility is endless. So we can go up to, so we have a few different credit line offerings. So we have one to fit really every investor's need. That being said, if you're a builder, we have a builder line of credit offering. If you're a business owner who is at least 2 years seasoned, we can look at your P&Ls and do a line of credit based on, you know, what you're able to profit and kind of match up what we can offer you based on that. So I always say for lines of credit, just contact us. We have a whole separate department because we have so many several avenues, and rates start as low as 0% with our lines of credit. That being said, we also have a very fresh offering. You guys are excitedly the very first group to hear Duke Allen and Company speak about our private bond offering. A lot of people are not so involved in the world of bonds just because you have to have bond buyers to make bonds work. But we have an incredible partnership. I'll keep him private. He's a private man, but he is a beast at selling the bonds, and given our bond buyers, private bonds are a thing for us now. We can go up to 15 million. Just to let you guys know, this is a 32-year term. I'm talking to the right group when I talk about average daily rate. You're looking at day by day. You're not, and night by night. You're not just looking at, you know, the month of cash flow. So you can understand that when the bond is being serviced based on tack on payments, and for anyone who doesn't understand, this bond is built around what is considered a tack-on fee. And so the underwriting with this works backwards. So while the underwriting team is very much so open to hearing what an investor's input may be for where that tack-on should be, they're underwriting and telling you where to tack on. So to give you an example, instead of Airbnb, we'll just say, we'll keep it Airbnb. You have an Airbnb in Tulum, just to make it interesting while you guys are imagining things. And we take a look at the books and we see that looking across at public market data, that the average nightly rate in these Tulum Airbnbs and hotels is $180, but you're renting yours out each night for $150. So we've got that $30 gap. And so the underwriting happens backwards, where we come in and we figure out a tack on, whether it be resort fees, CAMs, whatever you can think of, a reason of taxes. Even in many cases, it can be written as a tax to add a certain amount, and it doesn't have to be the full $30. So let's say the bond is set up to secure through adding an $18 fee and some way tack on fee each night to the bond, underwritten to be considered for the next 32 years. That is what services the bond. That being said, the only thing with this, of course, is that when it comes to the point that some people get to in this space, you know, we can't live forever and it's time to sell off property. The bond is not collateralized by the property. It's underwritten based on the flow, or based on the tack on increasing the daily flow. And so with that, there's no PG either, no primary guarantor. So the bond, that 32-year term is pretty solid. So a client who has this active bond with our partner right now is Whole Foods, for instance, and they were able to secure a 28-year term, and that was like a huge deal. So the 32 years is, I'll say, pretty rigid because of the fact that they are such small daily returns. So what will happen in the case that life happens, it ends at some point. And making the most out of it every single day, is that at the time that you'd like to sell, let's say the Tulum property was worth $7 million and you had a $3 million bond. Now your $3 million bond is escrowed and it will continue to service itself through the life of the loan, and the property is worth not 10 million, but the $7 million. So that is something to be considered. But again, credit lines, always say reach out. There's a huge education piece to be had. Unfortunately, I consider it one of the spaces in this industry that there's a lot of misinformation on. But it's also one of the spaces in this industry that there's a lack of creativity. That's kind of our bread and butter across bridge products and all others is creativity. And so I'm really impressed with the offerings that we have and excited to work with you guys. And so, of course, those larger line of credits are kind of catered to an investor who's, say, a builder who's working on several subdevelopments, or someone building, several new construction projects, or, someone that your pace and your appetite, it'll be conducive to have access to that line of credit. And you're also able to secure a much more competitive rate with that. That being said, we'll move on here to this next one, Rich. I'm going to kind of just show you guys exactly what we lead with on socials, because understanding what's on here, you pretty much understand just at a glance again. So you can kind of see where the rates start, and you'll notice throughout time, even if you're to kind of look back, we're a huge proponent of Facebook groups, just like this group. There's a lot of opportunity in online spaces. And so we actually will change quite frequently in order to, again, be a major proponent of being transparent and having that education piece so people can see what things are looking like right now. And so this is the flyer that's out right now, that all of our executives have out right now, and the numbers get updated. Last time this flyer was out on our Simple Bridge product, which would be acquisition only on land, or property acquisition only. Before, we were having to cap out at 60% loan to cost. We were able to speak with our partner, kind of talk about some of the deals we're working on right now, where a lot of people are experiencing a lengthy permitting process, but they have plans in place. It makes sense. And so we were able to get that leverage up to 85% loan to cost on Simple Bridge. We call that an acquisition only. Of course, we would just need, like I was in that scenario, letting some explanation of why you're only acquiring the land. Because of course, like when it comes to land products across the board, including land refis, we never want to set up a situation, again, making things make sense on paper is what we do. And so, if we're doing a refi of, let's say, 80 lots, and there's no plans to build, no permits, slowing things down, it kind of turns itself into a land bank situation. You're pulling all this equity out for what kind of thing. And so we want to see that, because that's the asset. We want to take first position on the vertical, ideally. Invoice factoring, super awesome. Again, well-rounded range of products for our business owners across the board who fall in this space. And so definitely always say, contact me to see how you qualify. But in short, it's also non-recourse in the way that it won't show up on any personal dealings. You keep everything underneath your business. And we look at, those balance sheets in order to find a way to give you what you need based on your debt. And so that's like kind of the best space to be in. Based on having debt, you can qualify for that. And when it comes to our custom business purpose product, I do want to let you guys know that we didn't really touch on it in too long form on the last slide, but the custom business purpose product is practically just a refi that's built for people who have a distressed credit scenario. So the way that we approach that, let's say it's a mixed use, that's our typical client for this product. Someone who has, like we talked about earlier, let's say 16 apartments on the top, and then a 400 square foot restaurant on the bottom in New York City. And so now he's pulling, we're looking at what he's bringing in from the restaurant, sure, but we're focused mainly on what those residential units are bringing in, and the overall value of the property as it stands. Based on that value, let's say the client had a 650 credit score, and we were able to pull 200,000 out based on the value of the property. What's going to happen is at closing, we've been able to prove through underwriting, it would mean that we made it to the closing table, that this is a custom business purpose loan. And so based on custom business debt, proving that anything affecting the borrower's credit right now is due to debt obligations that can be tied to business material, running the restaurant, what have you. And so they'll escrow, let's say in this case, half. The investment committee will decide case by case. So at closing, you're closing with the 650, with the understanding you're going to be allocating whatever portion is agreed upon with the investment committee towards your business debt, and then agreeing upon a score at which you'll have access to the rest of the credits, let's say, or the escrow. So let's say a 700 credit score. At that time, you come back before the committee, you show us how you've been able to allocate the funds that you pulled out from your, and it doesn't have to be mixed use, but this is just the typical buyer. It could be just a straight up, rental property, completely residential home, but you've been able to show that you've been able to keep that property in good standing as well as pay off this business debt. You're at a 700 now, and you get the rest of the 100K. So it's built around like a very specific scenario, and there's several very specific products for very specific scenarios. But this just kind of gives you a look at what we talked about earlier, up to 90% purchase price, 100% rehab, short terms, long terms, everything you can think of really. So manufactured developments are a space that a lot of people don't touch. They think when we're talking about hard assets, something that's tangible and it's tied to the ground. It can't be moved. It can't be, put on wheels and rolling away. However, we do have one of our investors has an appetite towards manufactured developments. And so minimum loan amount would be $500,000. Doesn't have to be like a certain amount of mobile homes, but it just would have to require a loan that's at least $500,000 is the only thing. And so we do actually very uniquely to this space as well have offerings for mobile homes. As you can see, the leverage is a little bit different with the max LTV loan to value being 60% with those. And I will let you know the underwriting with the process with this is a little different as well, given that, again, there's a little bit more risk there. But again, we can make it happen, which is great. That being said, though, the way that we make it happen, we'll kind of go into on this next slide here, is by working directly with you. And so our process ideally starts with an application, but also ideally starts with meeting you guys at one of our 3 networking events we host each month, meeting you guys in online spaces like this one and following up. And I totally understand sometimes you want to pick someone's brain a little bit more, or you just need that guidance before filling out an application. But I just want to let you know that pre-screen is how we start to make sense of your deal, how we can start to look at public data, kind of do a quick desktop appraisal and ask you exactly what we're going to need based on your client profile. And so the reason why we do like to start with that application is to be conducive to best serving you. It also allows, of course, for instead of ballparking numbers, efficiency and accuracy, letting you know exactly based on all of the information that we have and little things like if you've done 6 flips in the past 18 months, I want to know that so I can make the adjustment for it. Everything counts. If, in your exit strategy, you're talking about refinancing into your rental portfolio, that can count towards an adjustment if the ARV based on 70% rule is off, with the understanding that this thing is going to be cash flowing with just a little value add and just, a few months from now, later this year, we can make the adjustments for that. And so it's not to tie you in. There's no credit pulled at this stage. There's no anything. We're really just trying to get a proposal that, beyond getting, numbers in front of you that are accurate to what we can actually offer, numbers that will stick based on adjustments that have been made. That being said, if anything, falls through the cracks in the proposal and it comes out later, let's say when I get your full REO scheduled, a track record in which line by line you can place your addresses and keep a track of your holdings, which I really encourage you all to do throughout time. And we see that you've, again, got a great amount of experience in the last few months. It's not like, oh, it's too late now, we'll make that adjustment. But it's always nice to just, promote retention of terms from the first time you've laid your eyes on them. And that's the great way to see it. And so we're also a huge proponent, though, of hopping on the phone, talking things through, giving you an idea of the blend. So it's like, while we don't prefer to ballpark, like, we are approachable in that way where we love to do, quick little valuations and give you our 2 cents on your deal and an idea of where we think you'll fall. That's absolutely possible as well. But with a commitment to, a straightforward and boring closing, a quick process, it's an even better reason to already give us the opportunity to formulate the proposal and be productive in getting you closed. That being said, that's what lets us hold up to the private lending at your fingertips. It's that easy thing is having what we need from you. And then we can, hold deadlines and uphold our end of the deal, get you that money. And so this next page here will just kind of show you what the application looks like at a glance. I encourage you all to kind of scroll around the website too. Definitely an educational piece. A lot of what we do is on that website, but I'll let you guys know we're going through a facelift. There's a lot of new things, and that's why there is that piece where we invite you to reach out to us, and there's not too many conversations, too many questions. We're very, very newbie friendly. And that being said, we can, talk CapEx and everything else with our seasoned investors as well. So a completed loan application is the ideal beginning of the process, but that process can start with conversation about your strategy, getting to know you. We're going to use all that in the character component of your proposal when we go before the investment committee to secure the best bid on your deal. Just a few questions: who you're working with, what you're working on, how many things have you worked on in the past, what are you going to do after this, do you have a preferred title company? Important stuff, and a lot of stuff that once we've got it the first time, we won't have to ask again. And that's a great part of building that long-term relationship with you guys. That being said, just so you do know, in the case that we have someone who is pulling credit across the board, that's a soft credit pull through and through. A lot of people say soft credit pull when it is not. So I want to look you guys in the eyes wherever that would be and let you know soft is in soft credit pull. And that does not happen until due diligence. And you'll sign an authorization for that. So, just want to let you guys know that as well. Reiterate that with this step. That being said, the last thing is just to kind of invite you guys out to see us in person for those of us who are local or are willing to hop on the road like I am. I'm a world traveler myself on wheels, and we host 3 networking events. We're actually going to be adding a 4th one here in just a moment to the board. I'll keep that under wraps how it's supposed to be, but we do that each month. We are absolutely a proponent of creating your team in that room. So of course, want to have rest, a good time, like, grab some hors d'oeuvres, a quick drink, and, shake hands, create surface level relationships. But I think it's so much more than that. You've got builders in the room, architectural engineers, attorneys, stagers, photographers, contractors, GCs, litigation guys. If you've got some weird JV joint venture stuff going on, like everyone in that room. And so I always say, come out every month, make the most of it, keep showing up, and hey, we feed you, we raffle, give you gifts, like we're wining and dining you for real. So come and see us. Like, will you accept this date, please? And so the second Tuesday of every single month is going to be Gwinnett Work. Third Wednesday of every single month is going to be Flipping Mojitos. And this is actually a tentative date change. We're about to change the name of this one. But I believe we will keep the last Wednesday of every month for our Real Estate Investor Association. And that is the more keynote speaker driven education, sit down, take notes meeting that I spoke with you guys at the very top of this meeting. So please do come out. We're on the spot, of course, networking. We're generating leads. You guys are generating leads when you come out, shaking the right hands, forming a team. And it's an opportunity for us to, on the spot, I'm no stranger to sitting down with someone on the spot, running numbers really quick, looking at the blend, pulling it up. I've always got my iPad or laptop on me. And so, money can be made in the room as well. And the room's always packed. So please RSVP so we can make sure to account for everybody, maybe rent out some extra space on the patios of these spaces just to make sure that we've got room for everybody. It's a blast. And more than that, it's a real opportunity to get more than a transactional relationship, which some of you, to kind of add a human aspect, you may be familiar with. Sometimes it can feel in this space. And I've been able to form not only beneficial mutually, but deeper than surface level and sort of business level relationships at this event with like-minded people. And that's a huge important part of staying focused on your goals, is surrounding yourself with people who are focused on theirs. That being said, that's not all I have for you today. So please ask me questions. Find me on Facebook, Cait Alford. Find me on Instagram, Hard Money Cait. And find me in the application, Cait Alford on the application at dukeallenco.com.
My goodness, Caitlin, that was a lot of information. Good job. You could basically, each aspect of what you guys provide, you could probably do a full presentation and Q&A on. That's interesting with the private bonds. I have a couple questions for you. I think, so that you do have business credit here is something you guys provide. A lot of what our members do, and myself as well, we do, as well as, investing in distressed property and doing fix and flips. We also buy or get into master lease strategies, right? So typically, it requires startup capital to do that, as well as regular properties when we're staging. There's, depending on the size of the property, 3, 4, 5 bedroom, you could be as much as 30 or 40,000 to stage that property, to set it up as a short-term rental. And so one of the things that we're always kind of looking out for are, those business lines of credit options for our members, to kind of understand, what those options look like. So how do you guys work with that, and how, what does that look like?
Definitely. Huge part of it too, in terms of scaling, is to move past the kind of person-to-person relationships that have that autonomy and that even more quick access. Like, sure, our draws can be as short of a turnaround as 48 hours, but there's nothing like swiping as you go, getting things done, paying your guys on a job. So with that, as he mentioned, Rich here, one of our specific line of credit offerings is for business credit. And so what's great about our department for business credit is they'll actually start with you at whatever stage that you're at, because I know there's some new guys on here too. So if you don't have your BNB number yet, we can start there. But I'll let you know our ideal client has their BNB number, and we can simply just run what they're looking like in terms of credit, how much they're asking. And then what we're going to do first is basically on our platform, a soft ask. And so we're going to ask for all that you need. And then if for whatever reason it bounces back our request, we're going to look at what it is line by line. We can look at in terms of your business, maybe existing trade lines, whatever it is, to get you exactly what you need. That being said, what's great about that, I do believe this will change. And so I'm just saying, reflecting today on June the 8th, Thursday, 2023, is that we do a success fee. And so we don't collect payment on that until we're able to secure you the agreed upon line of credit. And so ideally, want to have a good personal credit scenario as well. This has also changed since we brought on what used to be a third party, and they're now a separate department inside of Duke Allen and Company, where we wanted people to already have a 700 score. And if you didn't, we personal score. And if you didn't, we'd send you through credit restoration before you could get started on business credit. But we work with that scenario as well. So I'd say the best thing to do in terms of getting your business credit consultation is see what we can qualify you for, or at the very least, what steps it would take for us to qualify you for what you need, is to go on our website and schedule an appointment. You'll have someone reach out to you and we'll start from there. And so at some point in the process, this is fairly new, our credit department, you will be kind of passed off hands to a consultant, from an executive to our credit consultant. But we'll be able to, much like with our deals and going to capital providers, kind of preface the scenario, kind of let them know a little bit about your background. And from there, it's just working to secure you exactly what you need and thinking long-term too, past a current deal. But with these lines of credit, we're thinking of, a lifetime of deals. And so the $100 million line of credit, up to $100 million line of credit, that's a separate offering that I do think there should be some space held for as well. So the minimum for that separate business line of credit offering is $25 million. And so again, this is a very specific type of client who will qualify for this. And it does require a 20% interest reserve. But that is a rate, it says between 0 and 6% on much of our literature, but I'll let you know the blend reflects 4% on that. And so that's something that I really encourage people to take advantage of. And there's actually a consultant available who will help you with sourcing the interest reserve in the case that you aren't liquid heavy enough to get that. And so it's, again, one of those sort of reverse underwriting things. But yeah, very straightforward. Once we just look at the client, look at what your pace is going to be, what your appetite is, and then really just make it make sense of what you look like as a business, how long you've been in business, all those factors, similarly to with, straight up originating the loan to you are considered, which is really nice. But yeah, so please do schedule an appointment with us so that we can, give each client specifics on what we can offer them. And of course, if you're just getting started and completely new to it, help you out with securing your DUNS and branch number and get started with what you need.
Awesome. And so on the credit restoration, same thing there. You guys kind of work with folks to, if they're not at that 700 FICO or whatever FICO you need them to be at, you kind of help them out with, direction on that aspect as well.
Yes. So our credit restoration department, and then lines of credit department, and then line of credit and private bond offering are different. And so it's nice to know, like, there's a separate product for whatever stage you're at. So just like Rich said, if you're, let's say that guy we were talking about closing about a week ago with a 490 credit score who is liquid heavy and no experience, if that isn't you, and your deals are outside of this Southeast area where we have the bandwidth to, manage products with a higher risk client like that, just know that we have something for you. So you come in, we'll kind of hop on a quick Zoom call. Sometimes we hold it on Teams. And we're going to have you go to one of our third-party websites and have you pull your own report, so that it's not affecting your score coming out the gate by us pulling it. At that point, and this is a specific person for a specific reason. They give us a full glance of everything that we need, and it's formatted correctly, based like in order based on how much it's affecting the score. So we go down that with you on the meeting. And this is something that, again, another department more spearheads. And so they go down that report with you on the meeting, and it's a diagnosis. And then they set a goal for you, give you a realistic timeline from your goal. And then from there, they'll speak about any promotions that we have if available, but based on how long you're going to need to be on the program before you meet your ideal score. you know, it'll affect how much you bring to the table. But it's great because we kind of have that added aspect of ultimately wanting you to get your credit in a good position so that you can work with us with our bread and butter being real estate investment projects. And so what is very unfortunate about a lot of credit restoration, credit repair companies, services out there is they're more so focused on this, residual monthly fee or even sometimes this crazy lump sum. And then they're taking over a year sometimes, and there'll be months. And I've just heard horror stories, just like long spans of time go by where you don't hear anything and you see no movement. And I'm not gonna, say that they're doing it on purpose, but it's just a pattern I've noticed. And in this space, we're kind of rushing to get everything argued off the report as soon as possible so that we can get you where we really want to, which is, buying real estate, investing, closing deals with us.
Awesome, awesome. So listen, everybody, I'm going to put Cait's email in the comments, and so feel free to reach out to her directly, schedule that appointment, kind of let her know your situation. I've known Cait and Joe for many years, and they do a great job with the networking events. So for those of you local in Atlanta and Georgia, if you're not already attending those every month, you should. There are definitely deals happening at those events. I actually found a deal last year that we did a rehab on from flipping mojitos. And so, you guys are doing a great job as far as exposure and networking and getting the community out and being able to network and get deals done. So that's awesome. And so, Cait, I'm going to talk to my folks here, and like I said, I'd love to welcome you back because I think we could essentially, spend some time on one aspect alone of what you guys provide as options for investors. And so, definitely would love to invite you guys back at some point and do a deep dive on what that aspect looks
Yes.
like. So truly appreciate your time today. We definitely we'll keep in touch, and we'll see you at the next networking event. Just as a reminder again, guys, BNB Investing Group, we help investors navigate through master lease strategies, management, and or buying properties. And if you have an interest in learning more about how we help investors, feel free to reach out to me directly. Usually on Facebook Messenger is the best way. We can schedule a quick 15-minute strategy call and see what your goals and objectives are to see if we are a good fit for you. So thanks again, Cait. Really appreciate you taking the time today.
Thank
and
you.
We'll definitely see you again soon. And thanks everybody for jumping on, and we'll see you guys next week. Take care.
Thank you. Let's make some money.
All right.